Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening to today's show, and check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. We're on the Magic 8 or the Big 8. What is it? The Great 8?
Big 8.
The Big 8, man.
The 8 ball.
You know, it's funny. I was looking up podcasts the other day just to see that world. Man, it's huge. I mean, everybody has a podcast. It's really...
Yeah, the barrier to entry is so low. You can get a laptop recorder and a USB mic, and all of a sudden you're a podcaster.
Yeah, it's great. However, you cannot get on what we are on, the Big 8, or certainly Google or YouTube or any of these other things without having content and being, around a while. So Malibu Funding has sponsored the show for, 5 or 6 years, and we have hundreds of shows up on YouTube. And YouTube is Jeff Barton, the Mortgage Voice. So if you go there, please leave us a review. We use that review not only to make the show better, but also to get other people to listen. Obviously, if you're giving us feedback, that helps us expand our reach to other people. So thanks very much once again for listening to the show. FICO scores. Okay, every year at this time, we talk about different criteria about loans. What is a loan? How do you get a loan? How do you get started? The ABCs, the nuts and bolts of it. I'm taking a couple of courses to be an EMT, right? Now, I'm an old guy, so I'm not really going to ride around in the ambulance and save you. However, one of the things I've learned about being in school with younger people, being in school just to be able to expand my knowledge base, is that simple things that you can do to improve your chances in that world to live, but in the lending world to get a loan. And they're really not all that complex. And if you thought about it for a second, you'd be doing it. But most people nowadays, they don't do it, because when you're thinking about getting a mortgage, you're thinking about, right now, can I get a mortgage? You're not thinking about, okay, I want to buy a house in 6 months or a year. These are the steps I have to do to get there. One of the main components of that process is your credit score. Do you know, and I don't know if you know, Daryl, millions of people don't even have a credit score.
I did not know that. I figured everybody did.
No, it's unbelievable. Now, does that preclude you from getting a loan? No, but it's going to mean you're going to have to pay more in the interest rate.
How can you stay off the grid so much that they didn't pick up something?
Well, this is one of the things that they're talking about changing in the way that your credit score, my credit score, anybody's credit score is calculated. One of the things that they never used to include in your credit score, because the landlord wouldn't do it if you're renting, is your rent payment. If you knew all your rent payments that you've been making for 10 years if you're a renter, and now you want to buy because you finally saved up the down payment, you're having a child, you got a better job, you're both really psyched up, is if you had known you needed to have your landlord report that rent every month for 10 years, you would have a stellar FICO score, a stellar credit score. But they don't, unless you ask them to, and unless you make it easy for them to do that. That's one of the things they're trying to change. They're trying to look at your rent history, not from 10 years, but let's say 2 years. So if you're listening to my voice and you're hearing what I'm saying and you're thinking, well, I'm 24 years old, I got out of college, or I got out of trade school, or I just in the workforce, I think in a couple of years, I probably will want to buy a house. This is a great way to be able to get yourself a credit score, telling your landlord that you need to have this rent reported to the bureaus. Now, how do you do that? You go to Fair Isaac, or you go to Experian or TransUnion or Equifax. They all have criteria by which your landlord and yourself can sign up and report that. Some of the things that they're also trying to do, now we talked about this 18 months ago when they were initially beginning to talk about changing how credit scores were issued and looked at. One of the things that they're looking at more strongly today is your trending credit report. Now, what does that mean? If you're a person that is out there and you have a credit card, you have 5 credit cards, you have a loan, you have a mortgage, all of these things are reported. And they're reported because that's just what the companies do in order to boost not only Fair Isaac or the credit score of the credit bureaus, but it also puts on your record, that either you've made great payments on time and continue to make them, or you're not making great payments, you never pay, and you probably never will. That would hurt you if you wanted to buy a house because it kills your credit score. However, on the reverse, if you are doing all that stuff, you're going to have a smoking credit score. What they used to look at is a snapshot of the history of you. Now, how long is that history of you? Well, for me, it's my whole life, and I'm an old guy. So that's 60 years of credit scores. They're not doing that as much. What they're really focusing on is the last 24 months. What have you done in the last 2 years that makes you credit worthy, that makes you someone who we want to lend money to? Because don't forget, the banks, the mortgage companies, the lenders, the mortgage bankers, all the people with the money don't make money unless they lend the money. Yes, they have fees on your ATM. Okay. They have fees on your accounts at the bank. Yep, I get it. But the real money to be made in lending is lending. I mean, it's just one of those things whereby they want to lend to you. So making yourself as attractive as possible by either improving your FICO score, improving your income, or your reported payments that you make to things that you might not often think about are payments that should be reported to FICO, i.e. your rent. These things make you more attractive borrower, i.e. they give you more clout with the lender, with the bank, with the mortgage broker, with the mortgage banker. What do I mean by that? Okay. When you borrow money, you're going to get charged for that money, and you're going to get charged for that money for the length of the loan. In the mortgage industry, they have a thing called Amortized Lending, which means that they will give you a period loan and they will spread the payments out evenly so the payments are the same every payment for the length of the loan, especially on, let's say, a 30 or a 15-year loan. But what does the amortization schedule really do? It places all of the interest payments in the front part of the loan. Why? Because both here in California and nationally, people move, and they move all the time, and they sell their house and move all the time. So if you've got a 30-year mortgage and you've paid off your loan in 7 years, that's the magic number. 7 years, most people stay in there. That's the average. Most people stay in their homes about 7 years, then they move. If that's who you are, the bank, the mortgage company, whoever holds your loan wants to get their money as quickly as possible, which means, yes, you get an even or the same payment throughout the process, the 360 payments, but all the interest that you're paying on that loan gets paid in the first 7 to 10 years, or a lot of it does, most of it, which means that even if you move every 7 years, the bank has made the money because your principal balance hasn't come down that much. And anybody who's got a mortgage, look at the mortgage statement that you get every month, and you'll see, especially in the early 5 to 7 years, you are paying probably 80 to 90% on the interest payments. So given that being what it is, you want to make sure that you can have the lowest rate. How do you do that? FICO score, credit score, making sure that you are doing things to up your credit score and lower the amount of money that you owe. Two things about owing money. One, when you owe money, it actually improves your credit score, but only if the amount of money you can still borrow is greater than the amount of money you owe. What do I mean by that? You have a credit card. Everybody's got a limit. Say you have a credit card and a $1,000 limit. If you borrow on that credit card $450, it helps your credit score if you're making monthly payments. If you have $560 on that credit card, more than half, it hurts your credit score because it shows that your borrowing capacity is less than what you owe. That's really important for when you're trying to improve your credit score. Put your rent on your credit and make sure that you are that you owe less than what you can borrow. And those two things will help your FICO score. It'll give you a lower rate, and those things are really important, especially in today's market where if you're looking at buying something and getting in there, you want to be able to use the money for the down payment, not in the money that you're going to have to pay on the monthly mortgage. I'm Jeff Barton. I'm your voice. Mortgage industry. We will be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome, everybody. I am Jeff Barton, and I am your voice in the mortgage business. Thanks for listening. Check out the Mortgage Voice podcast on Apple Podcasts, Google Music Player, wherever fine podcasts are heard. You can subscribe to it for free and never miss an episode. We are on YouTube, as everyone knows. Our channel on YouTube is Jeff Barton, the Mortgage Voice. Subscribe to the channel. Click on the bell to get notified whenever a new episode is available. And we do these every week, as well as specials. And we've got a couple of TV shows in the works. So please stay tuned. And thanks again for tuning in, listening each and every week. KCAA, KMET, and K-Tahoe are our three great stations. And we're on several times during the week. They replay the show a number of times. What we try to do, as everyone knows on the show, is bring experts to you to be able to explain what's happening in the lending business. Now, it's not all about rates all the time. There are a number of different programs which are not necessarily rate sensitive, because really what you're trying to do is get the loan. Anyway, to figure out what we're doing now in the almost close enough to the end of winter, I guess it's in another month and a half. Groundhog Day was, I guess, when was Groundhog Day? Was it?
I think it's yet to come.
Isn't it? I have no idea. Anyway, Brian Hewitt from Nexus Lending is here. He's been with us before. Brian, thanks for coming on the show.
How are you doing today?
You know what? I'm okay. It's a beautiful day, and I'm still working. I'm still, plugging away. Rates have remained really strong, and I wanted to get you on because I haven't really heard about your particular company that you work for, and I want you to explain what you guys do best and where are some of the things that you might be able to help them with.
Oh, certainly. Nexus Lending is what we refer to as an all-day or non-QM lender. We don't do the government lending and follow the same rules. Part of what brought this about was the change in the tax codes in 2018. Everybody will notice your tax forms are completely different.
Yep.
And it allowed for some people who would have qualified for a regular Fannie Mae or FHA or VA loan in the new system may not. But their credit scores didn't change, their income didn't change. It's just general income the expenses, how an underwriter will look at the income. And there's thousands of reasons why an underwriter may allow something or disallow something. So there's this very large market with the tax changes that's resulted in borrowers needing to have alternatives to the regular conventional lenders. Doesn't mean it's bad rates. It's
right.
Usually right about the same rate or slightly higher. We've come up with 12 different formulas to figure out people's income.
Okay. And the ability to repay rule is not as strict in the non-QM world as it would be in, say, the conventional Fannie Freddie world?
Well, so actually the ability to repay is equally important in all aspects of a loan.
Okay.
So we always have to meet the ATR aspect, but it's how you document the ability to do that. So somebody who has, we have a program called the 1040 Plus.
Okay.
And what it is if you file your 2018 tax return or coming up to 19, we look at the total income on line 6, and we divide that by 12, and that's your income, and it meets ATR legally. So there are reasons like, for example, limited capital gains or royalty incomes or things like that, and there's hundreds of reasons why an underwriter may not allow you to have all the income on line 6. We actually allow it.
Okay, and that would, I guess, affect a lot of people who necessarily would have written things off on their taxes in the past, right? That's what you're really talking about.
Yeah, exactly, because a lot of people took the standardized deduction this year because it was better than what their write-offs were in prior tax years.
They doubled that, didn't they? Didn't they double the standard?
Doubled it to like 20%. $24,000, I think.
Right. And that really is way more than what most people would have written off anyway, unless you're a business and you're writing off cars and travel and some other things.
Yeah. So that's where the non-QM or alternative market has kind of looked at.
Right.
People think of it as loosening in lending.
Mm-hmm.
It's not necessarily the loosening in lending as much as the change in the rules have taken people out of that regular conventional market.
Now, how many people are affected by something like that, whereby one year they would have been able to qualify, next year they're not, and so looking for a lender like yourself to fill a need, what kind of, I guess, how many are you talking about there? Millions of borrowers? I guess so.
Oh, yeah. I mean, you'd be amazed at how many there are.
Mm-hmm.
Because these are people who don't change jobs. Their financial situations change where, you inherited a property, now all of a sudden you have a write-off with a rental. You may not have had that the year before. So it's not always about your employment that causes changes.
Right. What are your favorite programs, I guess or the most popular ones that you're currently doing a lot of at Nexus?
We do a lot. So we have 3 programs that we do a really good amount on.
Okay.
1040 plus, which is line 6 divided by 12 of your tax return.
Right.
For your total monthly income. We have an asset qualifier plus that is, to meet ATR, the average loan pays off in 7 years or less. So we said if they have 7 years worth of reserves or 84 months, that meets ATR, so it's a no DTI loan because the reserves qualify you.
Okay, what are the reserves? Are they cash reserves or are they other kind of accounts? How do you judge reserves?
We use 100% of cash.
Okay.
Stocks and bonds are 90, and retirement accounts are 80.
Okay.
Because of the delay in those monies being available down the road.
Sure.
And then the other program we have is for investors who are doing investment properties, 1 to 4 units. We're about ready to release a 5 to 8 unit product as well, but it's a DSCR program where we use the rents to cover the mortgage payment, or at least the majority of the mortgage payment.
That's a popular program with a few other lenders that I know of.
Yeah.
But you're raising it up to 5 to 8 units is a different ball game, because a lot of the units that you want to buy or invest in, they're 5 units. They're whatever it is, C3 or in Los Angeles.
Yeah, especially in older communities where they had larger lots. All of a sudden they tear down a house and put in about 5 to 8 units.
Right.
And some of them are beautiful. It's amazing their cash flow.
And that type of investment, obviously, in this market is really important because people are looking for some way to be able to hedge against maybe the economy not doing so well in a couple of years. Because that's the real fear in all these markets is, yes, everything's going gangbusters, has been for 10 years. So getting something that you can invest in, and because of that, and what did you say the rates were? Just a little bit higher, right? So you really...
Well, yeah, I mean, we locked one today that was a 3-unit investment property going with the debt service coverage for DSCR.
Uh-huh.
And I think it was a 40-year fix with 10-year interest only at 5.25%. We locked an owner-occupied today at 4.875. That was a 2-unit cash out refi. So...
No, that's...
The rates are, they're not bad.
No, they're not. And on a purchase, what kind of a down payment are you bringing into a property like that? 10%, 20%, more?
So the interesting thing is you can finance on owner-occupied up to 90%, and on investment you can finance up to 80%. But the majority of the loans that we're seeing are really well-heeled borrowers who are putting 30 and 35% down that have high 700 credit scores, and they're really trying to put themselves in the best cash flow position.
Yeah, it's funny you say about FICO scores. What do you see in these type of product from borrowers? What kind of FICO scores? What kind of credit scores are you looking at? Mid-7s to,
It is interesting. My mid-credit score is over 760.
Yeah, it's amazing.
My average LTV is just over 60. And my average loan amount is $1.2 million right now.
You see, there are a lot of really well-heeled borrowers who take advantage of things when they're available. That's why programs like this are a safe bet. They're not something like you were saying earlier that somehow the credit restrictions or the underwriting guidelines got less. Listen, I have about 30 seconds left, Brian. Can you shout out your phone number or a way by people who are listening to the show can get a hold of you on this great loan?
Certainly. My first name is Brian, last name is Hewitt, Hewitt. My phone number is 949-529-7366, and it's Hewitt at nexuslending.com.
Okay. Brian, thanks very much for coming on the show. You always give us great information, and we'll look forward to doing it again. Thank you.
Okay. You have a great day.
You too. Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in and thanks for listening. Check out the Mortgage Voice podcast on Apple Podcasts, Google Music Play, and wherever fine podcasts are heard. Subscribe for free. Never miss an episode. Hey, and also leave us a review. The reason why is because it not only helps us get a better show, but it helps other people find the show because we use what you give us as a basis by which we can go out there and appeal to other people. We're on YouTube, so if you go to YouTube, go to Jeff Barton, The Mortgage Voice, that's my channel. You'll see this and every show that we've done for the last, 3-4 years on there. There are some historically great shows, and of course, topically, things change. So we will try to highlight where we are in each and every show. So if you just go there, read the review of the show, you can certainly get something out of one piece or a couple pieces in that show. One of the people who have been on this show, the Las Vegas Real Estate Show, and hopefully our future shows that we're going to be doing on TV as well as radio, is Nina Penny. She joins us now from Arizona. Nina, how are you?
I'm great, Jeff. How are you?
I'm okay, thank you. It's been a trying year. In California, we have a lot of new laws and a lot of new laws taking effect, affecting loans, the market. Thankfully, we seem to have a pretty good rate climate right now. But I wanted to ask you about any changes that have come about for reverse mortgages in 2020 that I or the audience may not have known about.
Well, at this time, I'm really happy to report that there are no present changes on reverse mortgages, which is great.
Yep.
The one piece of news that has gone up is our lending limits has gone up a little bit higher, which is a very great thing. So people can get more cash. It was $725. It's now $765. 600,000 is the limit. But other than that, I think everything else is going great. We're doing more reverse to purchase.
Okay, tell us about that. Quickly tell people about that, because people, when they hear reverse mortgage, they think, this is some old product, and I'm worried about whether I'm going to have it once my husband or wife dies. But this is a reverse purchase, which is a completely different type of product than most people are used to thinking about. Tell us about that.
So, especially now in California, a lot of people are moving out of California, selling their homes. They've had a lot of equity built up, and they're selling their homes, and they're moving to other states, like the state of Arizona or Nevada. Mm-hmm. And what they do, instead of buying a home, using all their cash, they make a one-time contribution to a reverse mortgage at approximately about 50% of the sale price.
Right.
And then they are not obligated to make any mortgage payments as long as they live in the home. Just keep up with taxes, insurance, and any HOAs.
So really, so in California, everybody knows that in certain counties, especially Southern California and around the San Francisco area, most of these houses are worth at least $1 million. So you could sell that house, take half the money, buy something in Arizona for $1 million, put the other $500,000 in the bank, and never make a mortgage payment.
Absolutely.
Now, that's a pretty good deal, I would imagine, for someone who's 62, 63, maybe retiring down to Arizona, where I know a lot of people do retire.
Uh-huh. It's a lot of people, we're always fighting the misconceptions of reverse mortgages, like,
Yep.
the bank owns the home, the bank, sells the home, they kick people out. Those are all misconceptions.
Yep.
Since Ronald Reagan was in office, the product is totally new and totally switched. And basically right now it's just an FHA loan you're not obligated to make any payments on unless you want to.
Right, and that's the key. You can make payments. It's not like it's one or the other, and there are different ways by which you can pay the interest. You can make periodic payments. You can make the monthly payments. There's all kinds of ways by which you can look at this particular product without necessarily having to pay the mortgage, and that's a big deal, especially older people who may either want to travel or maybe have some medical issues. There's certainly flexibility in this type of product which allows people to be able to choose what they want to do with the loan payment or no loan payment.
Absolutely. If they want to make payments on it, they can. If they need the deduction, they can definitely do so. If they decide that they don't want to do it, they don't have to. If they want to do it periodically, if they want to pay into it in order to tap back into it later on, they can.
Mm-hmm.
Just very versatile product.
Now, what happens, and that's a good point, what happens when, let's say in my scenario that I bought this house and it was worth $1 million, and I paid half of it and kept the other half of the money in my bank account. Then 4 or 5 years goes by, now the property's worth $1.2 million. Is it possible to go back and take some more money out of the property?
Sure, you could refinance it. You can refinance a reverse mortgage to get more cash.
I see. So you can do a reverse to a reverse in that case, in case you needed the cash.
Right. They call it, yes. They call it a Heckham to Heckham,
right,
which is another name for the reverse mortgage, refinance.
Okay, excellent. All right, where do you see the market heading this year? I know you do more than just reverse mortgages, although you are not only an expert, but certified to do so. But where do you see the market down in your particular area or nationally going? Do you think that the real estate prices are still going to climb? Employment's going to be good, where the rates will stay probably as low as they are? What do you think?
I think right now the economy is doing so great and everyone's excited, and
yep.
I really see continuing growth in home values and appreciating, and people that have higher interest rates are now still being able to refinance into lower. You're seeing people, with at the higher values of the home, maybe cashing out, upgrading their homes. It's just a great market right now. People wanting to make a move, rates are being great, built up equity. It's fantastic.
Yeah, I agree. I happen to think that a lot of the bluster that we hear coming out of Washington is a distraction on the real fact that most people that I talk to, that I deal with, especially in the home loan business, they're excited because they are working and they are able to get a mortgage, and the rates are so cheap. The only problem here in Southern California is we don't have enough housing. I don't know how it is down in Arizona, but that's a problem here.
Yeah, there's a problem. It becomes a market in which you've got to act quick.
Yeah. Well, that
you see, a lot of people want to look at a house and they think, oh, maybe it was okay, and then they go home and they think, oh, let's go look at it again, and then the house there's
somebody else already bought it.
Contract.
Yeah, exactly. Mm-hmm. So, that's a good point. Let's say somebody wants to take advantage of this reverse mortgage purchase. How would they go about getting pre-approved or pre-qualified from someone like yourself so that they can go out and get that house without that delay?
So, qualifying for a reverse mortgage is not as difficult or restricting as a conventional loan. But normally what people do is they'll put together a proposal for them, and the first step is just doing a counseling to make sure that the person who you spoke to, like me, gave you the correct information about how the program works. Once you attend that counseling session on the phone, you get a certificate. And so that is the first step and probably the most time-consuming. Sometimes you have to wait a week to get that appointment with the counselor.
Okay.
So that would be the first step. We can get people totally pre-qualified so that when you find your house, all you need is the appraisal, and then pretty much the loan will go to docs.
I see. So it's a quicker process because, as everyone knows, most people who do reverses will tell you it's not quick. But you're telling me just the opposite, especially in a purchase where you got to take advantage of the timing. That's really important, and I think a great example of misconceptions out there in the marketplace about reverse.
Right. I think it's good to talk to somebody who's educated with reverse mortgages, if not myself, or just go online and do the research, because they are not the same programs that they were, and those misconceptions, they are outdated, and now it's just a very senior-friendly program.
Nina, we're up against it. Give us your phone number. Let people know how they can get a hold of you to do a reverse. All over. Malibu Funding, who you work for, is in 10 different states, and Nina can help you in all of them. So go ahead. Tell them your phone number, if you would, please.
Sure. My phone number is 480-635-2410, and my website is simplereversemortgage.net.
Okay. Nina, thanks very much for coming on the show. Once again, illuminating what people need to know about reverse. Thanks a lot.
Thanks, Jeff. Bye-bye.
Sure, bye-bye. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning in. Thanks for listening each and every week. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. Subscribe for free and never miss an episode. There are many things that we talk about on this and each and every show that are important to lending, not only today, but all the time, whether it's credit score, whether it's a particular type of program, which is how to approach your loan officer, or what's the best way by which you can go out there and select a home you want to buy. We talk about these things ad infinitum on the program each and every week. So if you're out there and you're listening, not just this show, but every show in the past, go to my YouTube channel. You'll see them all. Jeff Barton, the Mortgage Voice, and you can see about 250 shows there right now, and we have archived even more. But thanks very much for tuning in. We bring to you great guests. Connie Hernandez has been on this show several times, many times, and she always brings to us a local perspective as well as a national presence in both programs, knowledge base, and experience. Connie, thanks very much for coming on the show.
Hi, Jeff. Thank you for having me.
Thank you very much. Is it coming in clear, or am I not being able to be heard?
I can hear you fine. Can
Okay.
you hear me?
Yes, no, it's fine. I just didn't know. Sometimes cell phone reception being what it is, but I wanted to get you back on the show and ask you. There's so much noise out there in the world currently. Basically, when people come to you for a loan, are they interested in any of that, or is it all just let me get a home so I can raise my family?
For the most part, investors are interested in that. But
Right.
Our average client, which, they're looking for a home for their family, as you say, and or they're concerned about maybe improving their financial situation, they're really not. They're focused on the day-to-day
Right.
activities, and they're focused on taking care of their families. And yes, of course, they are listening to the news. And to be quite honest with you, what I really tell them is it's important to know what's going on in our economy, what's going on in the news, but at the end of the day, what really matters is what your personal financial situation is, the stability of your job, and what are your goals. My job is to listen to help you reach those goals.
Oh, that's excellent advice. And as I've been explaining on this show all day, is being able to look at your situation and trying to evaluate what it is you can borrow, how much you can afford to repay, and the rate by which you pay. And that's all hinging on a few criteria. How do you approach that with your clients?
We actually sit down because, as much as we'd like to think that we should all have a budget and we should follow that budget.
Yeah, I know. No, that's funny because I'm thinking the same thing. Yeah, I don't either. So I'm.
Right. So best attempts are to see what their current situation is, and again, listen. And as you know, we've been doing this a long time.
Yep.
I really have never considered myself any type of salesperson because I really believe my job is to listen and to analyze the challenges, and that's everything from their financial situation to their current situation with employment, their current situation with their debt, their expectations as far as the potential retirement, if that's in the picture, or just expectations of being able to buy their first home. And it goes from the far right to the far left.
Yep.
And we deal with those different gammas every day. So our job, and I think that I hope you agree with me, this is actually, I think you would agree with me, is to try to give them the best advice based on what we know, because they come to us because we're the experts.
Right.
What we know is going on with the banking, what we know as far as changing guidelines that are happening. So not necessarily the world news, but the banking news. Does that make sense?
It does, and I think what I hear you saying is knowledge of the client and knowledge of products that are available in order to help that client are the two things that you get with a well-experienced person like yourself, like many people. You supply the answers with the problems that are in front of you with the whatever the solutions are that you can give them.
Absolutely true. And on that note, I'm going to probably steal a little bit of time here, but on that note, I know that everybody's talking about the future, and everyone talks about how in the future everyone just can log on to their phone and get a loan within 10 minutes.
Uh-huh.
You and I both know that that's a very, very small percentage of the population.
Mm-hmm.
And for the most part, there are a lot of questions that need to be answered, which cannot be answered by a cell phone, which cannot be answered by a computer, or even, for that matter, someone who's chatting with you on the Internet, trying to get you through the process of an application and submitting a loan. So I think that most of my clients realize that their situation is sometimes scary, sometimes not so scary, but for the most part, they really do need someone who understands the industry, understands financing, understands how to improve their current situation, and they're just not going to get that from a phone or a website.
No, and
I think that's our job. Like exactly what you said, to be knowledgeable enough in the industry. I can't tell you how many loans have come to my desk because they've attempted to go online and they've been told you don't qualify. Well,
right.
They were never really asked by the computer the right question. Can they pay down debt?
Mm-hmm.
Can they add maybe an adult child that lives at home with them as far as income goes?
Right.
So there's a lot of things that we have to gain by experience and by being in the business. 20 plus years?
Well, you don't have to quote years now. Let's not get there. I don't want to be quoting how long I've been doing this. I guess the main thing in all of this, for me, exactly what you said. People have to be able to help. You can't get the information from, because it's only going to give you the information back that you are giving to the computer. Like computers, like programming, like a lot of things that you do online, it's user input, and then you get whatever it is that programming allows them to based on what you put in. You can't know that by saying a certain thing in a certain way, it would not be able to get you a loan, whereby if you put something different on the loan application for a different type of product, and none of it is illegal and none of it is hiding anything. It's just being able to do, like you said, you're adding a borrower. Maybe there's some debt that you can pay down. Maybe there's something that appears on your credit report that is affecting your credit score that you might be able to deal with very quickly. All of these things you're not going to get from when you're just putting information into a machine that's going to spit out a standard response. You need somebody somebody to help you and to ask the questions of how you should be able to do this. And only people in our business who've been around a while, who have seen the changes, really understand that and understand that, hey, you need somebody to lean on and to actually give you the kind of advice that you're not going to be able to get online. You just can't get it. I've read more FAQs in this business than I can tell you, but none of them give you the answer that you're looking for right now. Like, I'm just looking for, and you just get frustrated and shut the darn thing off.
Right.
I do. I mean, and I don't think I'm atypical, a non-typical borrower or user. I think a lot of people, they read the FAQs, and if the answer to their question is not in there, they pick up the phone or they write an email, and you wait 2 or 3 days, and you may or may not get an answer. And you really need somebody who's experienced in the business to be able to do that. Tell people how they can get in front of you or to contact you, if you would, Connie.
Oh, thank you, Jeff.
Sure.
In downtown Covina, I'm at 101 North Citrus Avenue. I've been there for just about 10 years, and in the area for just about a little over 20, like I mentioned earlier.
Yep.
But happy to help. I'm happy to answer any questions. Our services, as we all know, are free of charge. We get paid at the end when the bank has completed their task, so there's no upfront fees, and we are more than happy to give anyone advice on how to improve their financial situation. Our office number is 626-918-4592.
Connie, thanks very much for coming on the show. I appreciate it as always, and we'll be in touch really soon.
Thank you, Jeff.
Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Everybody, I am Jeff Barton, your voice in the mortgage industry. Thanks for listening. Thanks for tuning in. Check out the Mortgage Voice podcast on the Apple Podcasts and Google Music Play. Malibu Funding, the sponsor for the show, and the people that bring this to you have been doing it for years. Grateful to both what they do at KCAA, KMET, and K Tahoe, all the 3 stations that carry the show and have been doing so religiously and faithfully for years. It's great for us to be able to have great partnerships like that. It helps us to be able to bring information to you out there in Radio Land. And if you go to any of these sites, certainly any of the podcasts that are available out there, leave us a little bit of a review. Let us know how you think we're doing. And the reason we do that is because we want to improve what we do, and also, we help many people. And so if you're going to tell us what's going on with you, we probably are going to include more of that in the show. So thanks very much. On YouTube, it's Jeff Barton, the Mortgage Voice. We're there. We're subscribed to the channel. Let us know how things are going, and we can certainly notify you each and every week if you just click on the little bell, ding, and let us know that you want to have updates as to what we do. This week, mortgage interest rates. We haven't gone over that, but I want to. The reason is that we really haven't seen mortgage interest rates like this since 2016, and that was one of the headlines of the article that I was reading about rates. I mean, there's so much going on in the world today of noise and distraction. We've talked to several of the guests today, as well as offline to people in the industry all day today. I had a group from Flagstar Mortgage, Flagstar Bank. They came by the office, and we were talking to them about both online mortgage applications and also what's happening in the world. You can get really distracted by what's going on out there. I know I do all the time, and sometimes it's entertainment, and if you look at it like that, yeah, I guess then you can deal with it, shut it off when you want. But many people get wrapped up in what's happening in front of them and forget the ideas of how am I going to afford tomorrow? Where is my financial future going to land me? We have people that come on the show and talk about improving your financial lot for the future, being able to have residual income for when you retire, being able to save, and how are you going to do that? Most people save who buy a house by paying the mortgage every month. I know it doesn't sound like savings, but one day your house is paid off if, in fact, things go according to plan, which is 30-year fixed rate mortgage or a 15-year fixed rate mortgage or any mortgage that you can pay off. At the end of it, you have a house. It's worth a lot of money and you don't owe any money. That's the way most people do it in America. Matter of fact, as we've said on the show, most people who are millionaires did it through real estate. And the way you do that is one payment at a time until the property's paid off, or you take the equity that's in your property and go and buy something else. You remain with some equity in the property, but you keep building your real estate empire as you're waiting for the real estate market to continue to climb. Now, in recessions, in other financial catastrophes that happen, yes, your property value does go down, but it always, always, always comes back, especially in Southern California, where this show is being broadcast out to San Bernardino and Riverside counties, as well as up at Tahoe. Always, 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 and anybody that lives within the sound of the voice will tell you, yes, it was tough for a few years, but we hung in there, we hung on, and now our property is worth way more than it was before the catastrophe. And most people who bought properties in 2006, 7, and 8 will tell you that. Yes, their property went down 30, 40, 50%, but now it's above that by 20, 30%, even in the worst case scenario. We do a lot of business out in Las Vegas, Nevada. That's a big area for Malibu funding, and that particular market was hit as much as any market. We had Nina Penny on earlier. She's down in, Flagstaff or Tucson. Anyway, she's in the Arizona market, which again was another one of those 50, 60% markets that everything went down that much. All of these markets have come back so strong that now prices have risen to where they've never been before. So in that, knowing your options in what you can afford today, what you can be able to pay, wrapped up in the rate, right? And we want to talk about rates today. What are the 30-year fixed rate today? As I said, 2016 rates, 3.5% to 3.625%. That's 30 years worth of mortgage payments at 3.5%. That's pretty good. I mean, if you think about that for a second, 3.5%. I know we're used to these low numbers, but it's really a tremendous, tremendous rate. The FHA VA, let's talk about the FHA product. Granted, you got to pay that mortgage insurance premium, which I think is 1.25% on a yearly basis. So, you add that in on a monthly. But their rate is 3.25 to 3.75%. That is pretty good. And I understand that the loan limits on FHA products have increased. Nina was talking about the limits that have increased for the HECM loan, the home equity conversion mortgage, which is really a reverse mortgage. Those limits have gone up, but so have the FHA limits, and so have the county limits. Check your county, check Riverside or San Bernardino counties, what their loan limits are on conforming balance or high balance loans. And what that really means is this number, right? It's either in LA County, I know it's about $725,000. In Riverside, San Bernardino counties, it's less. I think it was $618 last year, but call the office or call the local Malibu Funding loan officer in your area. If you go to the Malibu Funding website, www.malibufunding.net, you will see a list of loan officers in the loan officer area. I don't know, there's 30 or 40 of them in there. And there are certainly, probably 10, maybe a dozen in San Bernardino, Riverside areas, certainly going up the 15, down the 15, all the way to San Diego. There's somebody close to you that works for Malibu Funding that can help you. So pick up the phone and give them a call. The 15-year fixed rate loan is at 3.25 to 3.375. I love that 15-year. I know you're sick of me saying it, but I love that 15-year loan. Why? Because the rate's smoking and you get the thing paid off. If you can afford a little bit extra, it's really not all that much extra. I mean, if you look at it or you call and you ask us for a side-by-side comparison about the monthly payment, but having that house paid off in 15 years is really good. You're 25, 30 years old, maybe you've just bought your first house or condo, and you're looking to get that thing paid off because that's going to be part of your retirement. You want to rent it out later. Yeah, it's really good. By the way, there are some tremendous loan products out there that are allowing you to get the loan for the property based on what it would be rented for. That's it. That's your income requirement. That's amazing. You're buying a house that you're going to rent out, and your monthly mortgage payment's going to be $3,700, and it just so happens that you can rent that house out for $4,000 a month. You can buy that loan. I mean, you can buy that house with that loan. Now, that is a smoking deal. The reason is we have an ascending real estate market, very steady employment market, and real estate has not really gone down in value in 10 years. We've been seeing this upward trend, and it's going to continue. We see that it's continuing. The things I read in the Mortgage News Daily website tells me it's going to continue, as well as anything having to just Google anything having to do with real estate values in your area, and you're going to see where they were, where they are, and where they're going. And nobody's telling you it's going to go down. Now, there are talks of recession. Sure, there's always talks of recession. But let's look at right now. We're going to have an election this year. We're going to get an election of a president. Is it going to really affect your job? Is it going to really affect the rates that are being quoted now? No, it's not. What affects these things are the overall market and the market conditions. We have very steady conditions here in the U.S. We do not have catastrophes. We have wars that are winding down, not building up. There's a lot of bluster. There's a lot of fear, but it looks as if that China deal is going to happen. Why? Because it's important to both us and the Chinese. A lot of the things politically that we talk about that change the rates really haven't done all that much this year. Why? Because employment is steady and the outlook for the economy is good. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much once again for listening to the show, and we will see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.